Okay, so I want to welcome everybody to the Mr. Top Steps Bootcamp and my segment here on the 3-day cycle. Polaris Trading Group is part of our educational series that we present with our members. And the 3-day cycle, some of you may already know of it, also known as the tailored trading technique. It's been around for quite a while. It's something that I've used for a number of years, and it's helped guide me with a lot of my own personal trading and years back when I worked for the investment banks. This slide should be familiar to virtually everybody out there, right? The disclaimers. We all know about those. Just one point about Polaris. We do offer services on an educational basis on a subscription, and we have various strategies and so forth that we employ. And of course, all the past performance stuff is not indicative of future results. So we all know about that. So let's just glance over that. All right, a little bit of my background for those of you that are unfamiliar. I've been around for 30 plus years. I think going on nearly 33 years now. And I worked for a variety of different investment banks over the years, trading individual stocks as a market maker. NASDAQ market maker. I've traded various derivative products, structured products, so forth and so on through those years. Started off years back at the old Shearson Lehman Brothers, way back when. For those of you that old timers, you remember them. I went on to work for a biotechnology firm, Cowan and Company. They're not listed here, but I was a biotechnology market maker for many years, back when Amgen was an orphan drug company. So that'll take you, give you some idea how far back that goes. I went on and worked, after that I worked a couple small firms, and then found a nice place over at the United Bank of Switzerland, UBS. I was in New York when I was at Cowan, down on Old Slip in downtown Manhattan. Over at UBS, I was the head biotechnology healthcare trader over there. So since my background from Cowan led me over to the over at UBS, but during the entire sequence there, I've traded a lot of various products, futures, etc., etc. When I left UBS back in 2004, now I worked for a couple high frequency type hedge funds. Now these are not the HFTs of today, but rather high turnover type trading funds that managed quite a bit of money, and I was part of that group. And again, I had an allocation of capital and so forth. Now that was the fund that I worked for was a fund of funds, and back in 2007, 8, that period when the financial crisis hit. Since it was a fund of funds, and actually they had a 30-day redemption policy, which was not necessarily commonplace at the time, but all the other funds that needed to raise capital for known purposes, of course, came and hit the ATM button to withdraw their funds out of the fund that I was working on behalf of, and I found myself basically out of a job, all right, because there was no more capital to trade. So so that said, there was no other place on the street in a sense to find a job. So I ended up started trading for myself, and worked my way into finding some of these chat rooms out there, because I was at home sitting in myself, kind of getting myself in trouble, effectively, sitting there on your own. And I'm sure many of you know that and can share similar experiences of getting in trouble. So I felt as though I needed to be, someplace with some people. So I started looking around, and frankly, there weren't that many good places. And the ones that I've, visited with, I said, they really teach this stuff? And I was really shocked at what was out there. So I hooked up with a friend of mine, and we started a small little kind of educational thing, very, very small. And I was with him for a few years, and it just didn't really wasn't going to the direction I wanted. And so I ended up creating Polaris Trading Group, and my basic goal over at Polaris was to teach those that wanted to learn, somebody with the experience that I had at the time, coming off the investment banks, um, how to improve decision-making skills. That was part of the mission that I wanted to create. We make thousands and thousands upon decisions every day, some good, some not so good, but one of the goals was I wanted to improve the decision-making capabilities of each individual trader, including myself at the time as well. Again, coming off working as a market maker and then transitioning, into a proprietary and then effectively retail type trader, individual. I had my ups and downs as well, just as everybody does. And one of the things that I wanted to do is take all my experience, combine it, and then saying, boy, I got some great skills that I've learned, and I want to make a cohesive program, the best at least that I know how to have done. So Polaris Trading Group was created, and we've been now, this is the beginning of our 4th year over at Polaris, and here's my mission, basically to improve decision making skills, learn new empowering trading habits. Many of us have bad habits, want to try to improve those, get some good ones, and try to encourage and enforce the good habits. Demystify price action. Now, a lot of people seem to realize that there seems to be some big mystery about how the markets trade, and frankly, one of my missions here is to set out to try to demystify all that action. Pull a curtain. Who's the man behind the curtain type of thing. Pull it back. And when somebody realizes that the market isn't all that mysterious, all right, when there's some basic tenets that you need to follow, then at least they have a better chance to excel, to learn, and to be profitable. Now, as Danny mentions quite a bit, this is not your father's markets, and I 100% agree. But we still need to learn new techniques. We need to learn some new courses and strategies to compete in this type of market and excel. All right, and then basically the last one here, guys, is to help you become a more informed trader. Now, people say there's professional traders and there's retail traders. I personally categorize them into two groups: informed and uninformed. And I know a lot of so-called professional traders that frankly are clueless, and they trade a lot of money. So what I'm trying to do is hopefully bring our members and those that want to learn to get into that informed group. Okay. So today's topic is the 3-day cycle. So I want to get right into it here. Give you a little bit of background history, and then we'll get into some of the core charts. So this basically dates back, 1940s, 50s. A gentleman by the name of George Douglas Taylor. It was simply, it was a short-term trading method, and he basically saw that the markets were inherently choppy, which, frankly, we see on a daily basis as well. But he was a small-time trader. He wasn't carrying big institutional accounts or trading big money. But at the same time, he realized that, as we do all here, and I don't think there's anything real new to anybody, but back in the 40s and 50s, it wasn't as widely known as it is today. But the large institutional guys are the ones that drive the price all around, and we know that, and as they do today. All right, so-called smart money, all right, that type of thing. The core premise simply was that the collective action of that smart money, drives prices from, extreme lows to extreme highs, but more in a cyclical type pattern that he has found, anyways, from his observations, more of a 3-day type of cycle. All right, now there are other type cycles out there. Some people use a 2.5 to 5 day cycle. Some use a 5 or 7 day. In his experience, a 3-day kind of short-term cycle seems to catch the highs and low kind of extremes in a fairly consistent way. and he was able to calculate in anticipation of what the next potential cycle peak or cycle trough could potentially be. And then that way he learned to position himself in a particular way to be on the same side of the large institutional type so-called smart money guy. All right, so you don't want to be on the back end of that. You want to be along with them. So the structure of the 3-day cycle simply goes on a cycle day 1, which is also referred to as a buy day, which by the way is today. Cycle day 2, a sell day, and a sell short day, cycle day 3. All right, so as you can see here in the little inset, the pattern can be generalized, all right, in a perfect scenario, a rally from the cycle day 1 low to the cycle day 2 high, and then ultimately from a decline from the cycle day 3 high back down to the cycle day 1 low. So that's the generalization. All right, let's get into a little bit more of the details, all right, and the core premises. So the 3-day cycle concepts and assumptions. The first is the terms that we use here will be violation and penetration. So violation is of the previous day low in order to create some selling, forced selling, and then the institutions try to buy it as low as possible. All right, that's part of the cycle. And then on the flip side and the upside was the force of penetration of a high in order to sell previous low contracts, all right, and then ultimately push the price higher to sell essentially overvalued either stocks, futures, individual hard commodities, etc., and then look to exit their longs, establish shorts, and then get the cycle pushing back down the other way. So the end of a cycle, basically, what George Taylor found was that that was the greatest moment of opportunity. So when the institutions can press the price as low as they can, and when the sellers finally, cough it up, that provides the opportunity for them to absorb all that selling, because they have the power to do so, right? Absorb all that selling and then jam the price back up, and then everybody, scratching their heads. All right, so the risk return turned out to be the best at those extreme points. All right, so a lot of people, by the way, use the term overbought and oversold. I got to tell you that when I was a market maker over the years, I never heard the term, at least internally in the investment banks, of conditions being overbought or oversold. We always use the term statistical extremes or stat X. So what's an overbought and what's an oversold condition? All right, very hard to truly identify it. You can though measure a statistical extreme, and that's the kind of the area in the background that I've come from, having worked for the investment bank. So we use those type of terms. So the extremes mark the end of one cycle and the beginning of the other. So let's go further into the violation and penetration aspect of it. So when the market has a tendency to exceed the previous day's high or low, right, there's some residual momentum there, right, when you're able to expand the range. So this results in what's called this violation penetration, right, terminology, and that provides some opportunities. But what happens, it's not just enough to penetrate or violate a high. It needs to convert that high or low into new support, what we call upper support or lower resistance. And then if it can do so effectively, in a collective manner, then the market then press more directionally. Okay, so at other times, what you'll find is it'll be what we call false breakouts, right? False breakdowns. We actually saw one yesterday. All right, I'll take a look at that on the chart shortly. And so what happens when there's a false breakout? All right, the price retreats back into the range. So being able to identify those, and again, there are techniques that we can use. The previous presentation that Rob did was about looking at the order flow, all right, and density areas, all right. Very good techniques and skills that need to be developed. What we're discussing here is more a generalization, so then you have you have an understanding of what could be happening, and then when you drill down into the more granular charts, you'll be able to understand what's happening, on an intraday basis. So again, these highs and lows in terms of the range, they're what we call simply key reference levels or key reference zones, all right, and they're markers, all right, for the day. And they become important because they provide a reference of whether or not the market is accepting higher levels, right, or lower levels, or are they rejecting them? All right, so that's important to understand, this concept of exception and rejection. All right, so this is all part of that, and those, always key reference points, such as daily highs and lows, or for that matter, value area highs and lows. All right, a lot of people don't really, think about the value area highs and lows as reference points, but they're actually perhaps sometimes even more important than a range high, a daily range high, or daily range low. All right. So again, if the price is effectively rejected off of one of these reference points, okay, then simply it's categorized as a reversal. So it provides an opportunity then to establish a long or a short position. And then, of course, many of you realize that there are what are called trapped buyers, trapped longs, or trapped sellers, trapped shorts. Okay, and you know what's going to happen to them, all right, and exactly what happened yesterday, and we'll get to that. So let's go step by step. We only have 3 days to consider, so let's go and describe each day a little bit more detail and see what we're looking to do on a normal cycle. Now, not every cycle is normal. There are aberrant days, but if we know what the norm is to be expected, then we can then, on a relative basis, judge whether or not the cycle is acting normally. And then again, some of that insight can provide us with all the other tools that we use, whether they're Fibonacci's, Elliott wave type, patterns, volume profiling, all that stuff that is also very useful, right? When we combine the analysis, or what we simply just talk about as context. All right. Once we know the context and we get a good understanding of what the context and what the market is attempting to do, and then determining whether or not it's succeeding, all right, in what the collective action of the participants is doing. So on cycle day 1, simply the main task is to probe, all right, to find a new secure low. So the previous cycle is assumed to have ended. Now a new cycle is beginning. And typically on cycle day 1, which is also referred to as a buy day, and it's kind of a misnomer sometimes, because a buy day doesn't necessarily mean you're just buying all through the day, but rather we're trying to find a buy point or a low point, or as lowest point that we can, right, in the range, right, expectations and range averages of the market, to find a secure low from which to have all the sellers sell out and then establish long positions. Once the big institutions are able to establish long positions and they're confident that there's no further follow-through selling, then now they're able to force prices higher. All right, and again, their collective action, they can do that. So there is an average decline usually that occurs on cycle day 1, and that average decline is calculated, and I think it's probably, if I'm not mistaken, it's about 15.5 handles right now, measured off of the cycle day 3 high, and we'll show you that in the spreadsheet that we use as well. All right. Now, what we do here at Polaris is we send out a daily trade strategy each morning, and that daily trade strategy is also posted into the Mr. Top Step room. All right, and let me just show you quickly what that looks like. while we're on that topic. Okay, so this is the mailer that we send out to our subscribers and members each morning, and we just got a little background history of the market, the calendar, and then this is kind of the meat of the report here. So it says PTG trading. So like for instance, this is today's for early this morning. Okay, and we basically I talked about there was some trap shorts yesterday, which we'll get to. Today is cycle day 1. Our expectation today, this morning, was that the bullish momentum is expected to carry through, all right, before any normal decline, which would normally occur on cycle day 1, to unfold. Now that did not happen today, the decline, but we were expecting carry through momentum today to the upside. All right, and we were also talking about that if the bulls should clear and convert the 2294 handle, upside expansion targets will be in play. We'll get to those in a minute as well. And then we write out 2 scenarios, bullish and bearish scenarios. So the bullish scenario this morning, again, clear and convert the 2294s, upside targets were measured out to 2300 up through 2310. We're pretty good there right now. We're somewhere in the middle of that range as we speak. The downside scenario never took place today. All right, so this is a report that we send out every day, and all our members and the folks over at MTS receive that as well. All right, so continuation on the cycle day 1 concept is the idea is any selling that's out there will continue until there's a low to be made. Okay, and once that low is made, then all the sellers and positions are flushed out, and then the market can begin to look to establish new bids and push the cycle into cycle day 2, okay, higher. Now again, here is a little bit of a graphic snapshot on the next slide of what that looks like. All right, the decline begins from the cycle day 3 high. Again, this is a normal cycle now if we're talking about. All right, smart money will establish some short positions after exiting their longs. Okay, into cycle day 1. All right, the cycle day 3 low is violated, again, which forces long liquidation. Weak hands get flushed out, forces the selling into cycle day 1. And again, the goal of cycle day 1 is to find that new secure low. All right, once all the sellers are flushed out, okay, the buyers can, and again, the big boys, they know, they have a sense of when the market is truly flushed out. And so they'll begin to establish positions, maybe cover their previous shorts from the prior highs of the prior day or so. Again, the cycle kind of begins, they begin to establish long positions. Once everything is flushed out, now they have the ability to push. Now, on the flip side, you may have some uninformed traders out there that actually short near the low of cycle day 1. What's going to happen to them? They're going to be trapped, right? So then we rotate into cycle day 2. So once that low is established, all right, the large smart money type institutional player can now begin to force prices back up. They use some of the late shorts that are trapped as fuel, right? And what they're trying to do now is they're trying to push price up to what is considered an average cycle range. So an average range projection from the cycle day 1 low to the cycle day 2 high, there is an average range, all right, it's an average true range that has been historically observed on cycle day 2. And so once price reaches that level, all right, then there's some selling that can begin. They can start taking profits. All right, there's perhaps a little backing and filling that occurs on cycle day 2. Cycle day 2 tends to be a little bit of a choppy type day. if it's a normal cycle, because there is some backing and filling that occur. People will take profits, prices will come back down, buyers will step in again. All right, and again, a little more of a balanced type activity that occurs within the context there. Once they've established, and again, a price does not always reach the range average, but once it gets near to it, once it reaches about 75% of the average range, then you'll start seeing the market start getting a little sluggish, unless of course there's some external news or events out there that that take a higher precedent over the normal trading action. Remember, we're talking about normal action here rather than abnormal, and so it provides a template, if you will, of what the expectation is, and then again we can fine tune and hone in on our own strategies and various risk models that we have in order to position ourselves accordingly. Whether you're an intraday trader, whether you're an options trader using options as a swing trading vehicle, all right, or whether you're an ETF, stock trader type thing where you're trying to position yourself. However you're doing, this is not always just for like an intraday scalping. By the way, this is not really a scalping type cycle strategy. It's more a 3-day kind of swing pattern. All right, but intraday traders, if you're specifically trading on the intraday time period, this can certainly be used very effectively. Again, understanding what the bigger folks are doing helps be able to position ourselves and take advantage of that. All right. So once we get to the cycle day 2 high, let's just assume that the market has reached its average targets, then how the market acts from there, right, is going to determine whether or not on cycle day 3 the market continues higher, or does it fail to go higher and then retrace back down, or beginning of the new cycle. So what's really key is when we talk about these violation and penetration levels of the prior range high, daily range high, or daily range low becomes into play. How is the market reacting or acting relative to those markers? Relative to the prior high, relative to the prior low. What happened in the overnight session? Now, the overnight session is taken into consideration, although the greatest liquidity is during the cash hours. But simply, it is taken into consideration of how well the market attempted to penetrate through a high or violate a low. And then, of course, we do place the greatest amount of emphasis on the cash session itself. All right. So, yes. All right. So, if you take a look at the slide here, again, a failure or a rejection at the cycle day 2 high, all right, will determine whether or not the market is establishing, new positions, trying to push up existing positions, or exiting positions and then trying to establish new short positions. Okay. So again, this is a very fluid, type environment in the way things, unfold, right? It's just not black and white. There's a lot of shades of gray, all right? But what we want to do, is look collectively at the bigger picture of what's happening. Again, many day traders get too myopic in the minutia, okay, in the detail. It's important to understand the detail, but it's even probably more important to understand the bigger picture of this. Okay, so once the high cannot be penetrated, and then on the flip side, at point 2 here, the low is violated. All right, then that becomes a sell signal. All right, longs are forced out. All right, and then further decline now in this case can happen. So this kind of completes the 3-day cycle. All right. So just some final comments and observations here. In general, simply that since we know that the 3-day cycle is from the 3-day from the cycle day 3 down to the 1 and back up. All right, the overall statistics that have been generated this is very high odds that there's a positive 3-day cycle. Now, what's a positive 3-day cycle? All right. Now, if you keep in mind that the majority of the large money players are effectively long-only type players, right? The big mutual funds. So there's actually a skew, right, on the bullish side of the equation. All right. So many times, even in a correction market that's going, a market that's pulling back, many times the cycle itself, right, still becomes positive. Now, what basically constitutes a positive 3-day cycle? All right, simply that what we want to be doing is the core of it is on cycle day 3 or cycle day 2. All right, we want to be above that cycle day 1 low. All right, that becomes the key marker, right? That's that secure low level that was formed. All right, so the bulls want to keep it above that on cycle day 2. Now, there are times where on cycle day 2, the cycle day 1 low gets violated, and they try to push it. They try to push price lower. Many times, the normal action would be the bulls buy that supply up and they rally it back above the cycle day 1 low. But the key of it is, all right, by cycle day 3, all right, price needs to be above that cycle day 1 low at some point during the session. Now, it doesn't need to achieve upside targets. So this is where technically, because on cycle day 3, prices have historically been above cycle day 1, 84% of the time, right, there is a skew for the positive 3-day cycle. Now, if we took the statistics and say, well, how many of those positive cycles actually reach the upside targets? Well, that's going to be less. I don't actually have those numbers handy, but it's going to be less. But that's not really the point. The point is there's a general bullish skew, and there's a kind of a flow to the cycle itself. Now, it's not perfect. No cycle is. Cycles can be jolted by external events. But, there's like a beach ball. You can push it underneath the water for so long, and eventually it's going to come back up. Now, the cycle tends to kind of right itself. It's like a kayak. You flip a kayak over, and, it tends to, roll itself back up. Anyways, I've experienced this 3-day cycle when I was a market maker. This is where I originally learned this. All right. Jesus, over, I guess, about at least 15 or 18 years ago, all right, I really was introduced to this. And it formed kind of a core of my understanding, as a market maker, and it just allowed me to kind of see the market from a different perspective. Many of the hedge funds and mutual funds use it. I'm not saying they all do, but the ones that I've experienced over the years, they've actually taught me. That's where I learned it from, was from a few different money managers. And this is something that they do follow, and I think they do follow it today, even though we have the electronic markets the way we do today. It's more of a strategy, and I don't think, regardless of how the markets are executed, techniques like this will stand the test of time. All right. Now, again, does this technique conflict with Elliott wave analysis or some other analysis out there? No, they're actually complementary to one another. All right. I've studied Elliott, and I know WB does a lot of that in our room. He's excellent on it. And again, I continue to learn a lot of stuff, from folks in the room as well. I don't think it takes away from anything. I think it enhances. Many times, there are things what we call matches, right? A level that I have matches with other folks in the room. So what we'll generally do is we'll type in, I got a match on that. Okay. All right. The last part of this, guys, is we have what's called an ebook. All right, an electronic book. Now, Taylor did what's called the book method. It was, he had a physical book, and I think you can find copies of it out there on the internet somewhere. I don't think it's the original book, but like ebooks or scrib books, those type of things, you could probably find it out there. But he took a hand book and wrote it in. Very difficult to decipher. Now I never did. I have a friend of mine that did, and I work with him, and he basically has produced an ebook, an electronic book. We use a spreadsheet form. So instead of just figuring out and trying to guess, what my friend Rich has done is he's created this ebook, and it basically takes the Taylor method and puts it in a more concise manner. And here's a snapshot of it, and I'll show you a live version of it today. But what it basically does is it gives all the statistics of the range. Now he goes back. There's two parts of this ebook. He started it originally back in 2008, and he has raw data every single day. And what you're doing is you're comparing cycle day 1 to cycle day 1 to cycle day 1, right? It's not consecutive days, but rather consecutive cycle days. Cycle day 2 to cycle day 2 to cycle day 2, and 3 to 3 and 3, and so forth. All right. And the data goes back to 2008. The most recent, we look at a 20 period average of cycles, all right, for the most recent data. And again, it's almost similar to like an exponential moving average, where we're weighting everything to the most recent. But the last 20 cycles are the most, let's just say, accurate, I would imagine, common to what's going on, in the market currently. So here's a snapshot of the E-minis for the S&P, NAS, Russell, and Dow. We also have spreadsheets for crude oil, the metals, okay, in the energy sector, natural gas, etc. And this is provided on a subscription basis, all right, on a day-to-day basis. So let me show you today's cycle, okay, as we entered into the session. Okay, does everybody see the chart here? Everybody should see this profile type chart, market profile and volume profile chart. Okay, so, okay, terrific. So this is one of our charts that we use, and as I mentioned, let's first and foremost, like the scenario 1 that comes from our daily trade strategy. So if price clears and converts to 94s, upside targets up to the 2300s, 2310s. That was the outline for today. Had the price broken down, we had downside targets. Okay, that did not play out. Many of you know we've been in this sideways chop pattern for seemingly forever. Okay, and but we finally were anticipating some sort of a breakout. We just didn't know what side the breakout. All right, so you can see over here, I labeled the previous cycle day 1, all right, and then it goes into, of course, cycle day 2, cycle day 3. Now, this has been an abnormal cycle, simply because the prices have been in a tightly wound 10 to 12 handle range, and the price has not been able to hit the normal rhythm of the cycle. Now, again, that happens. But when that does happen, the markets are coiling up, and we are expecting some sort of an explosive move. All right. So what you'll see here from what's on our chart is a number of different levels. Okay, over here on the right-hand panel, and you'll see the previous day's high and low. Again, those are always going to be key markers. And then what these levels here represent on the right hand side, where it will say MAP and TTTP, which means that on cycle day 1, if the prior high is converted to support, penetrated and converted to support, these were the normal cycle day penetration targets, okay, up above. We also have targets to the downside as well, should the cycle day, the current low of the day, get violated. So there's downside targets as well. I'm focusing here today on the upside one, since this is what happened in our markets today. What we were looking for, now let me just show you here. Yesterday, if you recall, and I'm sure everybody here does, they tried to push the market lower, didn't they, on the opening? Failed. This is that failure that I was talking about earlier. When the markets fail to violate a low and stay there, you get trap traders, you get some weak longs that got blown out, all right, and then they reversed it back into the range yesterday, all right? So this is what happened yesterday. So today, coming in the overnight, the way this profile is, it's a split profile on the TPOs, all right, the 30-minute lettering. We see the overnight profile here with the volume of that overnight, as well as the cash session with today's cash session volume. So it allows us to view the markets in a split manner to see what happened in the overnight, how it reacted, where were the volume, where was the distribution of volume, what were they attempting to do in the overnight, were they successful in their attempt, okay? So you can see here in this example now, on cycle day one, we're expecting a couple things. All right, the expectation would be for a normal decline on cycle day one. But on cycle day three, they attempted that decline early. All right, and they failed. So actually, this low here on cycle day three, all right, was an alternate secure low. That was an alternate secure low. So with that, the big money players realized that they couldn't break the lows. They, meaning the bears and the ones that are aggressively trying to sell, they couldn't break the lows. So now they have a window of opportunity. Since in the overnight last night there was no further selling that came into the marketplace, very little volume of course, but no further selling, and they actually attempted a little bit of a coup breakout in the overnight that seemingly early on looked like it failed. But what they proved here, we talk about probing a lot. So the market probes to see how far they can move the market. All right, so this, I think, in reading, and we discussed it today, this was a probe, okay, to see how far they could push it in the overnight. And then as you can see here, as it retraced, look at the high volume node there. All right, so again, we get into some of our profiling knowledge, okay, and you can see here on the cash opening in A period, they didn't break that volume point of control from the overnight session, and then it was game on, right, during the opening range. And then once they took out the high of the overnight, I think Danny was even mentioning that in the room, that he was expecting a move up to the 2300s and beyond, which was a great read. We were in our trading room here matching it as well, saying if they take out that A period high and the overnight high, this thing is gone. All right, and it's exactly what they did. But for those of you that were trading early this morning, you could see that there was a battle going on at that 95, 96. Huge, because it was a previous level. That 95 was a previous level. All right, and so once they blasted through that and they got to the 96, 7, 8s, it was gone. All right, and then so the targets that we had today already outlined were if the market cleared and converted at minimum the 94s, and that's what it did on the opening, we had upside potential, right, that would initially bring to the 2300s, and here it is, right up here at the 2300s. So there was a zone, basically I chose that simply because of it's a whole number, but two penetration zones right in there, right, between the 99s and 01s, so I just kind of split the difference. Remember, this is not pinpoint accuracy, but rather, giving general zones, and the zones are usually within a couple points of each other, plus or minus. But we also said that if the market can, hold that 2300, all right, as new upper support, all right, we have potential today to go to, the 10s. All right, so right here, possible high for the day. All right, and again, this is all given for us in advance, right, in the morning, and so our members and our subscribers can prepare. So this is, again, we don't make any predictions about what's going to happen. What we want to do is be prepared of what may happen, and then look at the actual data as it's unfolding, making some assumptions, some inferences about if this occurs and if this more likely happens, what's the expected outcome. All right, so we're trying to lay the probability, of course, on our side. So we were looking at the 94s to convert, and should they convert, take out the overnight high, right, and as they did in B period here, we knew that the probabilities favored heavily to at least get up to the the low 2300s here. So this is where we currently are, session high here, about what, 775. So as far as I'm concerned, anyways, at this point, mission accomplished. Now it's just gravy at this point. You can see the high volume node up here at the 04 halves already. So they're still pressing, and there's no the bears are just hung up, by their collar. You can see up here, yeah, there you go, the 2304.50 spot, perfect. All right, so that's a match. All right, that's a match of one of the things we had. How accurate is that, huh? Look at that high volume node and what WB has at 0450s, right? Spot on, as he says. So this is great stuff. If there's any residual now buying, into the into the rest of the day here, okay, we have the average 3-day rally, right, is 2309.11. There we go. We got another match. And then we got another match, WB. Look at that, at 2310s, okay? So, now this is all independent analysis. What I've done, the software that we have, now this is all available, the software that we have via NinjaTrader or Sierra Chart and TradeStation, if anybody's interested in exploring this further. All this does, the indicators here, all these levels, basically takes the information from the spreadsheet, okay, and places it right on the chart. Okay, so it makes it a lot easier for us to follow along what the next, instead of looking at a spreadsheet like this, okay, and staring at numbers on a spreadsheet. Okay, it takes these numbers off the spreadsheet and just simply places them on the chart. Makes it a lot easier for us, to analyze this stuff. All right. So this is the 3-day cycle, pretty much in a nutshell. All right. And again, I think it's very complementary to the work that others are doing, in the membership. All right, and I love it when the cycle levels and targets match up with say what WBs are doing and others in the room. It's just kind of since we're coming from different directions, all right, but much of the analysis is complementary, and I think it's a solid way to approach it. For me, anyways, the 3-day cycle over the years has offered me a more like a template of not what's going to happen, but how I can prepare each day. And it's really important that you as an individual trader have some sense of what may happen based upon certain events occurring. So again, it's all about preparation rather than prediction. And those out there that want the next guru to predict where the market's going to close and how far it's going to go up and so forth, there's too many of those people out there. That's not what you get here at MTS. It's not what you get from the contributors here, all right, at Mr. Top Step. What you're going to get is meat and potatoes, all right, that stick to your ribs, but you have to do the work. You have to do some of the work. You'll get the guidance, but you have to do the work on your own. And it's important that you guys do that. And I think everybody here certainly is wants to do the work and wants to learn this, no matter whose method it is or strategies. There's some great ones in here. There's a lot to choose and pick from. Whatever resonates with you is probably where you want to kind of focus some of your attention. So with the boot camp here, again, just kind of wrapping it up, we're able to provide everybody with a cross section of strategies, knowledge, right, techniques that are used by professionals and people that have been around in the business for a long time. Not somebody that just went to the Barnes and Noble, picked up a book, and opened up a website and calling themselves an educator. All right, there's a lot of that going around these days, and we want to make sure that we have quality, and transparency of what we do. And I think Danny and the folks over at Mr. Top Step, et al, do a great job, and I'm very honored to be part of this as a contributor. And this is what I wanted to offer for you guys today. Hopefully it's been helpful. If you guys want any additional information, okay, you guys can contact me either at Polaris Trading Group, David at PolarisTradingGroup.com here. And again, this will be recorded and will be made available for all. Or you can visit us at the website that we have, all right, PolarisTradingGroup.com. Very simple. And if you are interested in taking a free trial, coming in and learning more about the 3-day cycle, or any of the other offerings we have and things that we do, come on in and take a look. No obligation. Again, we have a cross section of folks from various rooms cross section with us and with other rooms simultaneously. Click on the free trial. Come in 2 weeks. No obligation. Love to have you. All right, and see what what else we can do for you. All right, in conjunction to what Danny's doing and everybody else in here at MTS. All right, that concludes my presentation for today. I want to again thank you, Danny, and the folks at MTS for giving me an opportunity to be a contributor. And I want to thank everybody for your attention, and hopefully it's been helpful for you today. All right, thanks everybody. We'll see you back in the room.